My name is Gary Fox, entrepreneur and podcast host of the Entrepreneur Experiment. Thank you for joining us today for Let's Talk Crypto, Tech and Increasing Your Organization's Net Worth. Make sure to join the conversation online on Twitter and Facebook at Business Show IRL, and make sure to use the hashtag Rebooting Ireland. Fred, thank you for joining me today.
Hello, how are you?
I'm great. I was just admiring your setup there before we went live. It's a super setup.
Well, thank you. Thank you. It's amazing what you can do when you have lots of time due to COVID on your hands.
We'll touch on that actually quite shortly. I'd love to get your opinions on the kind of disruption you've seen in the last year. But we'll start off in the crypto space. That's the first area I'd like to jump into with you. I followed your Twitter and I was watching you updating us the last couple of weeks on Bitcoin, NFTs. Just give me a broad kind of intro to your interest in crypto and where it's kind of started from.
So my interest in crypto originally came from the fact that I grew up in a family of bankers and have worked in the financial industry from a technology perspective for many years, and done a lot of capital raising as well, run companies that are public. And the financial system is very inefficient. And what blockchain promised relative to making that system much more efficient, in my opinion, was great. And so I got involved a number of years ago looking at some of the early exchanges, crypto exchanges, and really looking at originally Bitcoin as a transactional medium, a store of value, but also as a currency for payments, and really looked at what could disruptors do to build new financial institutions that essentially allowed you to have real-time payments without all the fees, without all the delays that the traditional SWIFT and ACH SEPA systems have today. So that was the origin. And then spent a period of time actually building a crypto exchange and crypto trading, realized that the industry just wasn't mature enough yet. The institutional investors certainly weren't ready, and the regulatory environment wasn't ready. There wasn't a way to for an institutional investor to legally, if you would, hold and trade Bitcoin. That has changed quite dramatically. And about 3 years ago, I joined the board of one of what is today one of North America's largest Bitcoin mining companies, Marathon Digital Holdings. And that business has effectively grown quite dramatically. A public company, so the information is readily available about size, but has gone from a market cap of under 10 million US to over 5 billion now, and is positioned to be clearly a very dominant player in the enterprise Bitcoin mining world. So big proponent of where Bitcoin has come and where it's going. When you talk about other cryptos, different perspectives on those, but I think Bitcoin clearly has arrived and is now institutional grade and government regulator ready.
Was there a moment on your kind of crypto Bitcoin journey where you were like, yes, I've now fully committed to this. I'm fully bought in. I see the full potential.
For me, it was when really we started seeing some of the first hedge funds, some of the first arbitrators, arb players, if you would, really doing arbitrage with Bitcoin, because as soon as you get enough liquidity in a market, it starts attracting the players. And for me, what really cemented it was when the US regulators, when the IRS finally said, Bitcoin is a commodity, we're going to treat it as a store of value, kind of just like gold. At that point, when you had the taxing authority approving of it, and the fact that it came away from the SEC's regulatory umbrella to the CFTC, which is the commodity side, and now there wasn't risk that Bitcoin could be viewed as a security. That kind of said, okay, the floodgates will slowly open here because the regulatory environment is becoming very clear. And though there's still some confusion, you can look at the news today and you see a lot of large public companies investing in Bitcoin as a store of value because of the debasement of the US currency and other currencies. So.
What are your thoughts on that? That was something I actually wanted to ask you. What are your thoughts on the likes of Tesla and companies now storing value essentially and accepting crypto as a payment?
Well, I think you need to look at Bitcoin in two different ways. It's still inefficient to use as a form of transaction payment. A Bitcoin transaction can cost upwards of $8 to $10 US. to process. So the processing fees, the transaction fees are too high for it to be used for buying a theater ticket or something like that. That being said, for a corporation moving money around the world and not wanting to have currency risk, you could certainly use it for that. But its primary tool, I think, utilization is as a store of value. And you just look at how Bitcoin has appreciated in value compared to how currencies have fared. And even though there's actually still quite a high correlation between stock prices and Bitcoin prices, I think what you'll find is that it's an asset that has a finite quantity. So unlike gold, which is produced continually, there are only 900 Bitcoin made per day. And in 3 years, that number will drop to 450. And 4 years after that, it will drop by half again. And this finite supply, as more and more people come into the marketplace, this finite supply just forces the price up. And I think if you look out 4 or 5 years, you'll see the vast majority of Bitcoin will be held in institutional type funds. And the average and the professional investors will be buying shares in funds. They won't actually be buying Bitcoin in the open market. They'll be buying it through funds, but they'll also be getting exposure to Bitcoin through the public companies that are involved in the Bitcoin mining space, for example, and all of the ancillary businesses that exist around that. Because at the end of the day, a Bitcoin miner, their cost to produce a Bitcoin is 10% of what the cost of Bitcoin is today, or the price of Bitcoin is today, and very profitable businesses when operated successfully. And so I think for the foreseeable future, the industry has got nothing but upside.
That's a lovely, succinct answer at the end. Yes, I would have to agree with you. In terms of other cryptos in the area, what are your thoughts on Ethereum?
Yeah, so Ethereum, the premise of Ethereum, I think, is correct in that you have a layer 1 network that is quite fast. It has the ability to scale, and you have the ability to build these smart contracts on top of it. And I think smart contracts are where you really see the benefit of blockchain being applied on, especially in the corporate world, replacing letters of credit, replacing debt instruments, things like that. I think huge opportunity. The challenge to the way Ethereum operates is unlike Bitcoin, which is a fully decentralized network where nobody can effectuate a change unless you have the vast majority of the miners on board, and the hash capacity, if you would, of the network on board. And even then, it's very hard to get changes made. As was an example, in 2017, 87% of the hashing capacity of the Bitcoin network tried to implement a change and they couldn't get it passed. So it's a very secure network where it's very hard to implement change that could negatively affect it. In the Ethereum world, that's not the case. It's has had a number of branches that have happened. You have this shift to Ethereum 2.0, which is proof of stake versus proof of work. So you're going through this transitionary period with Ethereum where the question is really, is Ethereum the level 1 network that will dominate long-term, or will actually the traditional blockchain from Bitcoin with side chains become the kind of predominant blockchain because of the implicit trust that exists because of its truly decentralized nature? And there are things like Cardano and EOS and lots of other attempts at coming after this marketplace, but I think it's still very early days. That being said, Ethereum is the building block that most people are experimenting with today when it comes to rolling out platforms. So, Google wasn't the first search engine. Facebook wasn't the first social media company. I don't think Ethereum is necessarily going to be the dominant player going forward. There's certainly a very close number 2 network size-wise to the Bitcoin blockchain, but I think we'll have to see.
It's such a busy space. Is there any others coming up that you think have the potential to rival Ethereum?
Not yet, but realize this is not an industry where startups are coming in to disrupt today. This is an industry where large banks, financial institutions that are very, very well capitalized and can write $200 and $500 million checks are deploying their resources to build the next Ethereum, potentially. And so I think there's just a lot of money chasing this space because there is so much money to be made in the space. And whoever can control the level 1 and level 2 networks that banks and all these other industries operate on is going to be very powerful.
And you see the traditional banks now moving into that space, whereas traditionally it was almost like a dirty word to talk about Bitcoin and traditional banks in the same word. Do you see now traditional finance houses moving into the space quite aggressively?
Absolutely. I mean, Jamie Dimon has reversed his stance on this, definitely. And I think bankers in general are all looking at investing. I mean, even Fidelity is going into the Bitcoin mining business. MetLife just invested money in NYDIG, which is one of the leading sort of Bitcoin and crypto investment banks and investment institutions out there. And as a matter of fact, I think you're seeing, whether it's the Michael Saylors of the world, who's taken his software company and really turned it into a Bitcoin investment company, because most of the value of that company today is the Bitcoin that it holds. And so, as long as the price keeps appreciating, there will be continued interest in it. What's interesting with Bitcoin today is the volatility, and this was foreseen by kind of many of the early players, that as the liquidity in Bitcoin increased, volatility would decrease, right? When you move from a few large players holding substantial amounts of Bitcoin to it being more and more distributed by people who are long-term holders, the volatility will decrease. Granted, traders love volatility because that's how they make money, but financial institutions like that kind of slow and steady appreciation that happens. And people tout kind of Bitcoin and gold as one and the same thing. Well, Bitcoin hasn't, I mean, gold hasn't really appreciated to the same extent that Bitcoin has because it's not a finite supply. They're continuing to produce it. But I think Bitcoin still has some good legs, and you look at most of the analysts, most of the pundits are saying, 100,000 US as a price for Bitcoin this year is likely. And, even some bankers are saying, 400,000 or $1 million. And you can get all sorts of interesting numbers. But regardless, with all this interest, the price can only kind of go up, I think.
Super. And then moving on to the DeFi space, which is kind of building on top of all these, what's kind of it's new, but it's not really new in terms of what's your opinion as this grows out? Where do you see the DeFi space moving and crypto space in that?
Well, so DeFi provides this non-bank lending space, for example, which is very interesting. You've got a lot of experimentation going on. You have companies, BlockFi and others, who have kind of broken out of the, let's call it early stage mode, and are now kind of beginning to hit Main Street or the high street with their services. And the regulators are beginning to look at them. But my belief is that the incumbent institutions will always win when it comes to banking, lending, because the regulators are used to working with them. Regulators know these institutions know how to comply with rules. Upstarts, use Uber as an example in the world of transportation. Their whole way of engaging with the regulatory framework was really antagonistic. We're the disruptors, we're going to put you guys out of business. Well, the regulatory environment in the financial markets is very different. And if you don't comply, by a simple signature on a pen of a regulator, you're out of business. And so I think in the DeFi space especially, you're going to see them come under much more scrutiny as traditional lenders would be held, especially from a consumer protection perspective, I think initially. But it's an alternative source of capital, no different than private equity firms becoming lenders as non-banks. I think more and more capital will go to these markets because if these businesses are more efficient at deploying capital and the risk ratios are commensurate with traditional lending, then it's a could be a very profitable space for these banks to go. So you may very well see some of the big banks, some of the big institutions acquire these DeFi businesses. I think it's a different story when you look at fully distributed exchanges, because that's not a regulatory friendly environment. That's all about really obfuscation of, when you have two individuals trading something and there's no reporting of those trades. Now you have the tax authorities start getting worried about that. And as you know, the tax authorities are the primary driver of kind of this type of regulatory environment. So I'm less optimistic about the fully distributed exchange model.
Okay, we touched on a little bit there. I want to talk about the disruption you've seen in the last kind of 12 to 24 months with COVID. But just before we move off the crypto space, NFTs, give me a quick summary on your thoughts.
So I don't know if you're familiar, but there was a marketing strategist called Jeff Moore, who was very active in the technology industry a number of years ago, who coined this term crossing the chasm. And before you cross the chasm, it's the niftiness of the idea. Wow, this is cool, exciting, let's play with it. And then, okay, yeah, this is kind of great, but and I think the epitome of this is the gentleman who paid $69 million, who lost, the number 2 bidder for the $69 million Beeple's NFT, went to the auction houses and said, what else can you sell me? And he ended up buying an original Picasso and a couple of other paintings.
I never heard that end to the story. Okay.
So, I think it has to cross the chasm. And what does that entail? Well, you need more infrastructure, you need more volume in the market. And, I think what you are going to see is a plethora of photographers, a plethora of digital artists, a plethora of musicians, independent filmmakers who are going to take the content they traditionally make and now make a tokenized version of it. And it's a way to remonetize existing intellectual property. And I use that term very broadly because it could be even on books. It could be on any type of intellectual property. And it's not that far from tokenizing a piece of artwork and selling it fractionally. What's the difference between tokenizing a home and letting people own shares in a vacation home that way? So I think the regulators, again, this is an area where they're scratching their heads kind of going, are these security instruments? What are these? So we need to cross that chasm, get across into the mainstream where the regulators have put their stamp of approval. This is good to go. These aren't securities that people are out selling. They're actually kind of ownership shares, and people don't have to be accredited investors, et cetera. So there's still some, I think we need to make that cross. Bitcoin has clearly made the cross already. NFTs aren't quite there yet, but they will be. I think it's a great, very creative way that helps a lot of independent, intellectual property creators generate more value for what they do.
It's incredible that the buzz it's got in the last couple of months as well. I want to talk to you quickly about increasing your organization's net worth as a result of the disruption and the madness that has been the last 12 months. What opportunities have you seen in the last 12 months and even looking forward for increasing your organization's net worth?
So I think if you look at COVID, and the pandemic and the resulting kind of shutdown, it forced companies to change in a way that market forces typically don't act. This was a big sledgehammer, government regulation. You run a yoga studio, your business model historically was, there is a certain geographic radius around my studio that will attract people who are willing to drive only so far, regardless of the quality or the caliber of the instructor. The studio has only so many slots available for a particular class, and my instructors can only teach so many classes a day. So you have a yield optimization problem. Along comes COVID, nobody can go in the studio. Well, the technology for doing remote yoga sessions was readily available. And so some smart yoga instructors shifted, and instead of going from teaching maybe 100 students a day, they were now teaching 2,500 students remotely via YouTube videos, and they were having paying subscribers. And many of these small businesses pivoted and became much more successful post-pandemic or in pandemic than they were pre-pandemic. A story I love to tell is a friend of mine, because of the pandemic, he and his wife were expecting a child. They moved up to Vermont from New York, so the idyllic, bucolic countryside. And being new to the area, they started talking to the local person in town who did snow plowing in the winter and kind of was the general handyman for people. And what ended up happening is all of these, let's call them expatriates from New York City, were moving into the country. And all of a sudden they would go to this person and say, hey, where can I get this? Where can I get that? And he built a concierge business, excuse me, servicing all of these very wealthy people who time is money for them. So, hey, I'll pay you, do this, do that. And he built a very nice business servicing all of these city people in, food delivery, restaurant stuff, snow plowing, gardening, housekeeper, cleaning, laundry. And he became the connector in his community and built a great business. Other side of the spectrum, I advise a company that's in the industrial manufacturing space. They manufacture conveyor systems, so for moving goods within a factory, for example. In 2019, there was a recession in the manufacturing industry in the US. Every quarter, manufacturing technology companies were seeing slowly decreasing revenues because a lot of manufacturing had been offshored, et cetera. Along comes COVID, and the demand all of a sudden for products and technologies that enable companies to have fewer people in factories and have people more spread apart in a factory drove a huge investment in automation, as well as all the supply chain disruptions that resulted from COVID drove people to onshore manufacturing again. And those companies have benefited hugely from this. I think if you were to look across kind of the North American industrial kind of manufacturing companies, most of them have had boom times in this time period. And it's companies that were really dependent on long distance supply chains that have suffered because of all the disruption in all of this. And we're really moving to a world where agility and resilience are more important than efficiency. So if you were to believe in Peter Drucker, the godfather of management consulting, he always said, you have to be effective before you can be efficient. Well, companies for years had been effective at delivering what they manufacture, and they were focused on being efficient and optimizing their supply chains. And when you make something optimized, when you are focused on efficiency, change is your enemy. And so your supply chains become very rigid and they become hard and fast. And when you get disruption in that supply chain and you now need to be agile, it's very difficult because you typically have one or two factories offshore doing something. You're dependent on seaborne transportation. And when you get backlogs in ports and you have issues with getting goods out of factories, it has a huge disruptive effect. And so companies have had to learn over the past year and a half to become very much more agile. And when they become more agile, what it means is that they have to totally re-engineer what they're doing around certainty of delivery, resilience, and being able to be flexible. And what that means is their operating costs go up, but their resilience also goes up. And so I think you're going to see a shift in many companies now moving to more agile ways of working. The work from home movement is just one of those. I don't think we're going to go back 100% to everybody being in office. I think you're going to see everything from 4-day work weeks to 2 days in the office, 3 days home, or 3 days in the office, 2 days home. You're going to see a lot of ongoing experimentation.
That's great. Listen, Fred, unfortunately, that's all we've time for today. Thank you so much. Where can people learn a little bit more about yourself?
So they can find me at fredthiel.com. That's FredThiel.com or thieladvisors.com, either or.
Perfect. Thank you so much, Fred.
Great. Thank you very much.